Hi, it's ggoernert, Vice President, Senior Investment Advisor at Canaccord Genuity Wealth Management. And welcome to the show where I make sense out of your financial lives. Now today, once again, we're going to be joined by Javed Mirza, Canaccord Genuity, North American Technical Analyst, to talk about what's recently happening in the market. So I'm going to turn it over to Javed right now. Good morning, Javed. How are you?
I'm doing well. How are you?
I'm doing really well, really well. Now, you just came out on the 28th with your North American technical comment, and you talked about the sector rotation, and you talked about the bottoming process, and in particular, you talked about walking into the phase two of the 4-year cycle. Can you walk through what that means to you and how that looks?
Yeah. So, what our work is picking up. So, let's step back a bit. Back in March and April, we were very positive on markets, and we saw a V-shaped bottom taking hold. And luckily, that's exactly how it turned out. And then we started getting cautious towards the end of July. We were looking for a potential correction in August. But then we pushed that out, or the markets wanted to rally. So we thought that correction would come at some point in mid-September. But it actually started at the end of August or early September. And so now we've had this correction throughout the month of September. And at the end of September, stocks or equities started to improve, as did a variety of other risk on financial instruments. And what we were seeing in our sector work was that some of the more cyclical sectors of the economy were starting to pick up. And this is all in line with our longer term cycle work. So we have a long term view. Our view is out in the 2030s. We have the longest view of anyone working on this street. And what I would say is we're in a secular bull market, and a new cyclical bull market has just taken hold. And within the cyclical bull market, our work divides it into 5 phases. So phases 4 and 5 are the negative phases. This is when the market's under pressure, the economy's in recession. Phase 1 is the first phase as the bottoming process gets underway. And then phase 2 is typically the sweet spot. That's where the rest of the economy is showing signs of improvement and the market continues to improve. So it's definitely one of the fun times to be involved in the market on the long side.
Interesting. So now a couple of things that you're focusing on too is that sector rotation, the relative performance. You really like the infotech space right now and industrials going forward.
Yeah.
Why don't we talk a little bit more about that? Because for those who don't know what infotech is, and I think we've all been experiencing over the past 6 months on the need for investment in the infotech space. But why don't we expand upon that just a little bit more?
Yeah, so there's 2 main areas, hardware and software, and this covers a wide variety of companies that use information technology or that are purveyors of that. And then industrials, typically something like heavy machinery, airlines. These are all of the areas of the market with kind of doing the heavy lift in making the economy going forward. Also areas of the market like, for the home, like companies that produce equipment for the home, such as washers and dryers.
Mm-hmm. Yeah. Just onto the equity market sentiment. You've got it remains mixed right now.
Well, I think we've had a pretty big run up the last couple of days. This is a healthy pause and an opportunity for people to take some money off the table and kind of reevaluate what's going on. But our work remains unchanged here. We're very constructive on equities longer term, and we view the weakness we're seeing here over the next couple of days and potentially into next week as an opportunity to add equity exposure out for what we see as a new intermediate term rally. And if you're on the right side of the longer term trend, the intermediate term trend is typically 3 to 6 months.
Mm-hmm.
And if you're on the wrong side of the trend, an intermediate term move is typically 1 to 2 months. So that's why the correction we saw lasted 1 month, but the rally went from March to August. So I believe
Right.
that's 5 months. So we see a new intermediate term rally trying to take hold with upside out to potentially December and maybe all the way out into March.
Wow. Okay. So just moving across to commodities, I mean, you're still quite bullish on lumber. I believe I've got here copper. What are your thoughts on lumber? And then maybe you talk a little bit about copper because it's had
Yeah,
a big pullback.
yeah. So lumber was our pick of the year for 2020 as our favorite commodity. It's up almost 50% year to date. We still like lumber, especially if we're heading into phase two, where another big beneficiary or big industrial component is the home builders and all the activity around that. So that's why you've seen partially one of the reasons you've seen lumber skyrocket, in addition to homeowners whose whose castle is now their prison, have been doing home renovations, and that's what caused them the lumber demand to spike as well. So copper, we do like it. The only thing is we look a lot at smart money positioning, and they've been very short. So we do like basic materials. That's another one of the sectors that we like in phase two. So that covers copper, the other metals, zinc, aluminum. They should steel as well. They should all do pretty well in this phase of the economic recovery. But copper itself, I think it has a little bit more chance of a pullback here, but the stock's been holding in really well, which is a really positive sign.
Yeah, yeah. I mean, it was a big sell-off earlier this week, and there was some comments I saw out there. Now, equity market sentiment. You say that the market remains mixed on sentiment-wise, but and the breadth of it is kind of tepid, in your words. Looking at the put-call ratio, how are you positioned going forward? So you're thinking we might have a little bit more of a downturn, but use this opportunity to add to your equity positions, quality equity positions, obviously.
Exactly. So
Yeah.
we look at a variety of sentiment indicators. Breadth has been moving kind of sideways. You want to see it move up, and what breadth basically is saying is that it's broad market participation. It's not just like an example is in the 70s, they called it the Nifty 50. It was just 50 stocks that everyone was in. But that it's kind of like the FANG stocks that we have now. So it's a select group of stocks. If they're the only ones moving higher, that's not good for the broad economy.
No.
Broad economy and other areas of the market are lagging. So breadth has been, it's basically moving sideways, but we want to see it move up. Investor sentiment is very bearish, which is bullish from a contrarian perspective.
Yes.
The one thing that I don't like, which you mentioned, is put-call ratio. We still continue to see a lot of call buying, but the price action today, maybe into next week, is, I think, going to throw off some of those call buyers. So I think that's going to be an early positive, which should be supportive of further upside.
Okay. Why don't we just touch upon currencies as well, particular euro, U.S. dollar. We made some comments on that. What, how are you seeing things play out on that side?
So our technical work suggests remaining long-term bulls on the U.S. dollar.
Yeah.
So we've had a pretty big pullback here, but it looks like the U.S. dollar is trying to bottom and push higher. We've been talking about the euro since August, basically saying that it's forging this intermediate-term peak. So we definitely see further downside pressure on the euro based on a variety of technical and sentiment indicators. So that's kind of where we're at in currency world. But the other thing is, I'll segue a bit into the Canadian dollar. It's had a really good run here as well, but we think it's due for a bit of a pullback as well.
Okay, yeah, and that makes a bit of sense as well. Now, lastly, why don't we talk about crude? Well, oil markets, WTI. Where do you see that playing out right now?
So it's funny. We have our quarterly piece coming out this weekend, and we look at charts in the quarterly piece from a very high level perspective. These are like 50-year, 75-year, 100-year charts. And the key takeaway, and what I was struck going through it, is that both Brent and WTI, they're moving into, well, they've already been these down trends, but momentum is confirming it for this last quarter. So that's very negative. That reinforces our view longer term that we're in this secular bear market in commodities. Right. And this is our view is that equities are going to pretty good upside out to 2030, but commodities on the flip side are going to be longer term secular bear. And that's also, reinforces our bull case on the US dollar.
Right, yeah, because they're priced in U.S. dollars and that. Okay, hey, well, we covered a lot today, and I really want to, thank you for joining us again. Always some great information. Javed Mirza, thanks very much, Javed.
Greg, thanks so much for having me.
Great.